Okay, we got the CPI, and initially we had a rally, and it fizzled out with Bitcoin. Right now we had right around nearly a 3% rally, and now we're down 1.40% here with just over 3.5 hours left in the trading session. Again, the rally, just like the previous day, again, we saw a rally of 3% and it fizzled out. Yesterday we closed down 1.84%. So down, rallying up 3%, giving it back and closing down nearly 2%, down 1.84%. Here we've rallied up nearly 3%, down nearly 1.5%. The rallies are being sold. Bitcoin's going to go down and take out 80,000. I know. The Moon Boys, they keep telling us we bottomed, but again, this is what they keep saying. This is what they've said. This is what they've said at every single bottom. And again, and telling us we had a breakout at the top. Consider the source. They think everything is a bottom. And again, we get the dip that keeps on dipping. We're going to take out this low at 80,000. We're going to go back down and test 74,000. Probably take it out, get a short-term bottom. I think you'll end up getting another rebound and probably another leg down in January. It's possible you bottom just under 74,000. I think you'll get closer to 63,000, which is a 50% decline from the peak because that's what Bitcoin has done on average in the past. Even if we didn't sell off with this rally, even if we didn't sell off with it, again, the signals are bearish. Had we rallied up and then sold off tomorrow or over the weekend, you got to flip the cloud back to bullish and you got to go take out 94,000. Get a bigger rally. I told you back over here when we were bottoming out. I told you that we were going to bottom out. Before we bottomed out, I told you I was looking for a bottom. Then I was looking for a rally. Whoops, sorry about that. Had to take a call. Again, I told you that we were going to get the rally, and I told you I could go on into the Fed meeting. We've been selling off with the Fed meetings. I've continued to point this out. Again, we got the rate cut over here, and we sold off. We went up, and we got a fake breakout after that. And then over here, we got the October rate cut, and we sold off down from the head and shoulders. Likely take out 80,000, form a divergence, and get a rebound back up, and they'll be calling that a bottom as well. And it is possible that we bottom surrounding the 94, just under 74,000. I think it's more likely, though, we get two more legs down. I think we've already started here the December leg down. Got the bottom and the rally I predicted, and now the sell-off. And again, the Moon Boys falling all over themselves earlier today. Oh, here we go! And it fizzled out. Yesterday, we get the rally. Here we go! And it fizzles out. Their heads are going to explode when we take out 80,000. Right now, we're coming in to test the resistance or the support zone here. Again, I think you will eventually take this level out. We have the Bank of Japan raising rates here, and I believe that will end up being the evening of Friday, pardon me, the evening of Thursday. So I think that's expected with the time difference at about 10 or 11 p.m. Eastern time today, Thursday evening. So that's going to be later today. And again, I think you will eventually see the unwinding of the yen carry trade. I think we're already beginning to see the beginnings of that with the sell-off in anticipation of that, and each time we've had that, we've gone much, much lower. Sell-offs with the Bank of Japan raising rates, as I've talked about at great length and detail. So again, I think you're going to get these next two legs down. I think you'll get a rebound back up later, probably bottoming in January, and then I think you'll see a major sell-off. Please support the channel, though, with the link directly below. If you like my charts, you like my indicators, please let me know that by supporting the channel today. Take a moment to help out. I'd really appreciate it. Thank you. Now, again, we're likely to take out the support zone here very soon and end up forming a divergence on the MACD. The MACD is rolling over in the negative region. That's not bullish. The MACD is pegged in the negative region. Okay, we had this larger divergence develop with this peak right here, and we ended up moving into the negative region with that, and it's been in the negative region. The last time we pulled up and rolled over, that marked the final exit point right there at 116,000, which I told you was the counter trend rally for the final exit point. Now we have Now we have this rally going up to that same trend line from the peak down to the higher low that set up, down to our rally here, and we turned off of that. We broke the rising wedge, and we're back testing it, testing the 20 period. There's nothing bullish going on. Oh, here we go. And people start falling all over themselves and slapping each other on the back. Oh, here we go. Again, it's nothing more than a counter trend. I told you there's going to be bounces along the way. I predicted this bounce, but I also told you it was going to fail. And I told you when it failed that it was failing. Well, what's happening? Oh, we're selling off. And again, I'm telling you, this is not the bottom. You're going lower. You'll see a divergence end up developing here, and then probably take out this low at the April 7th low at 74,000, probably bottom, 70, 71, 72,000 maybe, or in the high 60s, 68, 69,000, something like that. And then you're going to get a rebound back up. But again, mathematically based indicators continue to be correct. They continue to be right. Look at the RSI. You had the extreme here, the fake breakout, turned down. We rallied up, bounced off the 200 period moving average. You went back to the 50 after breaking it, the green line right there, and you had the right shoulder. You broke down from the pattern, you back tested it, and then you had this drop. We were told this wasn't going to happen. I told you it would happen. I told you we're going to drop 40 to 50%. I see evidence of a top, back at the top, but we've been pegged in the negative region. You don't have a bullish divergence on the MACD or the RSI. This is not the bottom. But the people that never saw the top, the people that never saw the sell-off coming, those are the people that keep telling us, oh, the bottom's in. Everything's the bottom. And when we take out this low, they're going to be doing damage control, trying to tell us why that wasn't the bottom, and their heads are going to explode. Stochastic now reaching extremes, but again, it can remain at extremes for an extended period of time. You're likely going to take out 80,000 here very soon. And again, we're in back test mode of the trend line right here. I've drawn the trend line excluding the shadow and including the shadow, including the shadow. You're back testing it. You're testing the 200. You're testing the 20 period and the daily. You're testing the 200 and the 50 here. Yesterday, you're testing it again today. These rallies are being sold. Again, we're likely in wave 5, intermediate wave 5. I've marked this as primary wave 1, primary wave 2. You have intermediate wave 1, 2, intermediate wave 3, 4. And I believe we're in intermediate wave 5 to get a complete crash wave 3, which is primary wave 3. And it's from folding in 5 minor waves. And I believe that that's under construction right now. And we'll get a rally back up for primary wave 4. And then another dump into January to complete primary wave 5. I don't think we bottom until you get a bullish divergence or multiple point divergence with pring parameter, which is pegged in the negative region throughout the entire decline. Again, we're in a downtrend. We have a series of lower highs and lower lows. The Fed cuts have been associated with the sell-offs of Fed meetings. Even with the pauses where we didn't get the cuts, they've been associated with the sell-offs. Again, the last one was 29% with this leg down with our right shoulder. This one is probably going to be very similar to that, maybe even more if we go down and end up getting a 50% decline. I think you get a leg down here, you bounce, and then you get another leg down in January, and then I think you got bottom and get that massive rally. Fed rate cuts. We've been selling off. We've been told that, oh, the Fed's going to cut. Here we go. And we drop. We crashed 29% with the last cut. And then now with this cut, we're selling off. Complete opposite to what the experts and the moon boys are telling us. Yet they continue to hold out hope. Michael Saylor, he's telling us Bitcoin's going to be at 150,000 before the end of the year. MicroStrategy, good chance they're going to be delisted from some exchanges here, being reclassified because of their huge Bitcoin exposure. You got Tom Lee. None of his targets played out, so he's doing what I predicted he'd do. He's moving them into the future, into January. On to January, now we're going to be seeing these targets reach. And again, when we go lower and we bottom, I think we'll bottom likely in January, in the first quarter somewhere, but I believe January. Then all the targets are going to be moving further and further into 2026. All the people that got it completely wrong, all the people that never saw the top and never saw the sell-off coming. And you got a boatload of people. They're praying that Bitcoin bottoms out and goes higher. Why? Because they're holding, a lot of them are holding losing positions now. And they're trapped because Bitcoin's going in the wrong direction that they want it to go into. I think you'll end up bottoming out here. This is where I'm going to be looking to flip my trade, take my profits somewhere down in here, and then I'll be looking for a long position. Again, not a recommendation to buy or sell anything. I'm just telling you what I'm doing. Again, even though I called a bottom right here, I knew we were going to bottom out and rally with the holidays. I have no interest in this. This is a counter trend rally in a sharp decline. Never catch a falling knife. I remain short. I remain bearish. Down here, I'm going to be looking to take profits somewhere down here on my short swing trades. I'd be looking to flip the trade. But this isn't it. 80,000 is not the bottom. And I'm telling you, even when we bottom out in January, that's only going to be a local bottom, a massive bear market rally. Then after that, you're going to see the bottom fall out of Bitcoin. Bitcoin has started a bear market. Bear markets for Bitcoin are 80 to 90%. That means Bitcoin's going to 25,000 or under if it drops 80%. That's a bunch of fun, come on. These people are so delusional, so much in denial. That's what the Bitcoin bear markets are. We're about to get this rate hike from the Bank of Japan. And again, with the time difference, that should be, again, 10, 11 o'clock at night Eastern time in the United States. See what Bitcoin does. We'll see what performs over the weekend. But again, they've been associated with sell-offs. The rate hikes here in 2024 in March and July, you got nearly a 30% drop on both of them, 28%, it's over 29%, over 30% here in January, the last time they did it. Again, if you drop down, you're likely going to move back towards this 200 period moving average over December and January, and that's where I think Bitcoin will bottom. It's funny. I keep predicting all of this stuff. I called the top, predicted we were going to crash 40 to 50%, predicted we'd come down here beyond 74,000. Everything I've said, told you we'd break the trend line, told you back testing it, told you we'd take out the 50-week and confirm a bear market. Everything I've said has happened, but yet, the herd, they don't want to hear it. They don't want to hear the truth. They're in denial. They dismiss what I've been saying, dismiss the charts I've been posting. It's a bunch of fun. When, again, what I'm saying makes more sense than anything else out there being said. We got that topping tail last week. You're confirming it this week. By the end of the week, we'll likely have that confirmed. The follow through, you'll continue to slide down. You're moving towards this 200 period moving average. This 200 week moving average in the weekly time frame. The CPI data, we got the CPI data, but they only the survey data that they used was only from the day after the government shutdown on November 14th. Goldman Sachs is saying this is really compromised. It's really unreliable data. It's not trustworthy. It shows, the PI is collapsing. It's collapsing. Bitcoin rallies, and then now Bitcoin's collapsing. But there are likely distortions with that report. I think Goldman Sachs and Citigroup and a few others that are saying that, I think that they're probably correct. I think that we probably had distortions with the jobs report. I think the jobs report was probably worse than what they're telling us. But again, there were holes in the jobs report of presenting the data because of the government shutdown. There are holes in this report, inconsistencies, and I think it's a compromised report. So I don't believe the numbers. We'll wait and see what the December number comes in January. I still think inflation will rise back up, and I think Goldman Sachs will likely be correct. Here we're turning off of resistance, the midpoint of the channel, likely going to go down and take out 80,000. Again, bars have been red. Again, the counter trends have been back towards the midpoint of the channel. Just flip through some charts, let you look at some of my indicators. My signals, which got it right, my signals are correct, remain bearish. I predicted a short-term bottom in the rally, which I told you it was going to fail. It has now failed. I told you some of my signals would flip back to bullish if we got a bigger rally, which we did. I told you we'd likely go to the low to mid 90,000 area. We went to 94,000. I told you we weren't going above 98,900. I was right. Hold over and over. No, we're going to 100,000. You're going to be sorry. I wasn't sorry because I was right. My indicators were correct. Those that keep telling us that here's the bottom, they're in a world of pain because they're in denial. They suffer from permabull moonboy syndrome, PMS, permabull moonboy syndrome. And we've dropped, again, 36% from the height of the low. These folks are in a world of pain. The signals continue to be correct. I told you some of my signals would flip back to bullish, but then they would revert back to bearish. Oh, what happened? They flipped back to bullish and went up to that mid to low 90,000, 94,000, as I warned, and now they flipped back to bearish. 80,000 is not the bottom. I know all the experts and the moon boys are saying 80,000 is the bottom, and here we go, but they're gonna be proven wrong. Signals jumping around back and forth. Tried to turn back to bullish here with this rally back up, failed. We tried again yesterday, and it's failing today. Again, the signals that turned bullish are reverting back to bearish. So we'll see what happens when the Bank of Japan raises rates, if Bitcoin sells off with that, or if we get a post Bank of Japan rate hike sell off if we try to bounce. But again, signals remain bearish. I think our next stop, taking out 80,000, is coming down and testing 74, and I think you'll end up taking that out as well, trying to bottom surrounding that area. Now, these counter trends, the bars have remained red. The counter trends, the bars have remained red ever since the top and the reversal signal. I think we're moving right now to take out the 100-week moving average, going to move closer to the 200-week moving average. Again, currently at 57,000. I think you'll move down into 60 to 63,000, maybe a little higher than 63,000 if we don't quite reach 50%, but I'm expecting a 50% drop. Again, we got the reversal signal at the top. We got the sell signals at the top. There's no bottoming signal here. Zero, zip, nada. Over here, the April bottom, there were bottoming signals setting up, form bullish divergence. There was a bottoming signal here after this pullback. There was a bottoming signal here after this pullback from the August high. There is no bottoming signal. Bars remain red. Bars remain bearish. Signals remain bearish. There is no bottoming signal. 80,000 was not the bottom. Just some signals would turn back to bullish and then revert back to bearish. Oh, gee, that's what's happened. And again, they're now bearish again. And again, we're likely going to take out that support zone in the near future, taking out 80,000. Again, in the weekly time frame, got a topping signal, got the reversal bars. Bars remain red. There's no bottoming signal here. I think you're going down to this trend line right here from these lows, just as these highs were pointing to the top. I think these lows are going to be pointing to where we bottom to get the bear market rally. Then I think you rally back up to the 50-week, and then I think you take out this trend line and the 200-week moving average. I think you'll drop well beyond the 200-week moving average. Over here, we bottomed out just under it. I think you'll move much further below it and drop 80 to 90%, as I've said.